Hello and welcome to the Tradie Wives community. My name's Shane Laurence. I'm Head of Business Growth with FundTap. A little bit about my background. I spent about 7 or 8 years doing tax and accounting, owned a couple of businesses, managed a couple of others, and have spent the last 10 years in the corporate world. I've decided recently to join FundTap. I really truly believe in their mission and helping small business owners to sleep better at night, knowing they've got their cash flow sorted. So what I'll do now, I'll share my screen and take you through around the main financing options for small business. I want to thank you all for attending, and thank you to Maddie and the team at Tradie Wives for having us along. Won't be just a second. Okay, fantastic. So thanks for joining us today. I understand finance can be a little bit of a dry topic, but hugely important. Cash flow specifically is the lifeblood of your business. So do let me know if you have any questions or thoughts throughout. I thought I'd start today with a quote I've come across recently that I thought was very relevant to the type of businesses we're dealing with on a day-to-day basis, and specifically for those in the trades. So revenue is vanity, profit is sanity, cash is the reality. So the actual author of this quote has been lost in the annals of time, but it tends to ring true with most businesses we're dealing with. So I've attributed it to every business owner ever. We've seen a huge amount of on paper profitable businesses either failing or stagnating due to not being able to pay operational costs or possibly missing out on growth opportunities. So what we've seen is that cash flow is the biggest challenge for small and medium businesses today. It's the number one reason small businesses fail. There's also quite a large risk of reputational damage. So if you've ever been in a position or had thoughts around, what if you can't pay your staff next week, or you can't pay your suppliers for that next lot of product that you've just ordered? It can also be a big constraint on growth. So being unable to take advantage of opportunities that present themselves at that time. So whether that's bringing on another staff member, getting another set of tools, or again, possibly putting a bit of a delay on the supplies you need to be able to fulfill that. A lot of businesses have their finance sorted. However, business is never quite straightforward, and there's unexpected cash flow issues can still occur from time to time. So what we find is most businesses will have possibly some form of term loan. Next up will be an overdraft, and possibly some asset finance, depending on what they're investing in. As you'd be aware, cash flow varies and from time to time, so there's ebbs and flows in cash flow, depending on where your situation is at. And for a number of factors, whether that's growth, timing issues between completing work and outgoing costs and getting payment for it. Possibly what we're seeing also is extended payment terms from larger clients, so delaying the cash going into your bank account there. As I guess significant challenges ahead for businesses this year, and especially those backed by the family or rental property. Obviously be aware current cash rate of 0.25%. Commonwealth Bank estimates that's heading to about 1.25% in the next 12 months. There's a general consensus that's looking to head up to about 3% in the medium term. I've actually had a former Reserve Bank governor estimating it moving towards about 5%, and University of Western Australia economist picking about 8% longer term. So a significant impact on your finance fees there. If we look across the market in Australia, the small business lending market is worth $142 billion. So quite a staggering number, and one that blew me aside quite a bit. Of that $142 billion, 95% of it is secured, and 50% of that is secured against residential property. So there's some real risks in and around finance and the increasing cash rates in there. And I guess with that 50% as well, that's all in a market where Westpac expects average house prices to drop by about 14% over the next 2 years. So as we're saying, cash flow is possibly one of the biggest challenges for small, medium businesses out there today. Number of reasons, why that's occurring at the moment. We went through cash rate increases. That's expected over the next little while. Inflation rates are expected to hit about 4.9% over the next 2 years. Quite a number of supply chain issues, delays in getting product, which can hold up the whole value chain. As an example, a builder being held up getting product will put delays on the plumber coming in, on the electrician, on your tiler coming in. So it can have quite a domino effect there. Extended payment terms is something we're seeing a bit more of. So having larger clients extending, dictating extended payment terms, again, which means a longer time to get cash into your bank account. And also wage inflation. There's obviously a significant amount of labour shortage out there, exacerbated by the current inflation rates we're seeing, expecting to see wage costs increasing over the next little while. A couple of stats we've come across recently that we thought were pretty relevant for tonight. So 97% of all businesses in Australia fit in your small to medium category. So it's a huge amount of businesses out there in your guys' situation. 82% of all business failures were directly attributable to a lack of cash flow. So it shows the importance in keeping your business running on a day-to-day basis. We also crunched the numbers for the stats for our clients over the last couple of years, and we're pretty proud to say that those utilising our services increased their revenue by 54% over the last 2-year period. So what we'll do now, we'll run through a few just quick tips for you guys to hopefully help improve your cash flow. Timely invoicing, a number of the trades are working on, as an example, 28 days payment. So obviously the sooner the invoice goes out the door, the sooner the money's back into your bank account. Most accounting systems these days will allow you to set up automated reminders before the due date for your invoices. So the statistics show that setting up automated reminders increases your payment on time for your invoices by 15%. So it can have quite a significant impact there. Deposits, progress payments, quite common in your guys' industry. If you're able to negotiate them, can make a significant difference to getting cash through the door to help for the costs of that job. Good collections management. So this is effectively setting up a system so when your invoices do go overdue, you've got something systematized to follow up with your clients. It's shown that within 3 reminder notices, 73% of all overdue invoices will be paid. A big one is looking at negotiating terms of trade or beneficial terms of trade with your suppliers and your customers. So that's looking to extend the payment terms with your suppliers and reduce collection terms with your clients. Something we don't see a lot of businesses do unless they absolutely have to, but can make quite a significant difference to your business is some simple cash flow forecasting. What this allows you to do is knows when your peaks and troughs are and allow you to adequately plan and put things in place for when those dips do occur. So now we'll run through the 7 main financing options for your business. 2 different, main forms of financing options that you can look at. So there's the day-to-day finance. So those that help with your operational costs, growth opportunities, wages, contractors' payments, suppliers, taxes, etc., etc. So we'll look across on-demand finance, invoice finance, overdraft, and credit cards. The next one is business capitalisation. So that's looking across the longer-term financing of your business, possibly used for major asset purchases or expansion opportunities. The main ones in there, we've got term loans secured, unsecured term loans, and equipment finance. So first of all, we'll look at obviously the day-to-day finance options for your business. And we'll start off with on-demand finance versus invoice finance. So where possible, we've tried to group two relatively similar types of products, so you can see the comparisons between them there. So if we start off on-demand finance, in effect, you're getting paid now for invoices that you're waiting for your customers to pay. So it effectively turns your invoices into cash on delivery. Basic example being, if you're a plumber, you go out and do some work for a commercial client, your outgoing wages, fuel, supplies in the meantime. End of the week, you send off invoices and they've got 4-week payment terms. So you could be funded for 90% of that invoice value now. It obviously just helps to bring cash flow through there for you. Limit amounts, 1,000 to 100,000 with no minimum invoice value. Generally no property security required, and a really quick online application process. Went through with someone last week, and it took us about 10 minutes from woe to go. Look at invoice finance. So again, it's financing outstanding invoices. So it allows you to get paid now for invoices that you have outstanding. It's money you've already earned and just looking to put it in your bank account as opposed to anyone else's. Invoice finance tends towards the larger businesses, so they're generally looking 50 to 100,000 plus per month. No property security, as the security is the invoices themselves. Depending on the work required to actually get into it, the application period can take anywhere between 2 days and 2 weeks. So if we dig a little deeper now into on-demand finance, benefits and issues with it. So it's purely on demand, so only when you need it. As an example, you might have a cash flow gap this month. You can dip in. You may not need it for a few months, but in June, you have another situation where you're able to sort of take on a new job, which incurs extra costs. So you can dip in and dip out when required. No long-term contracts, so you're not held to anything there at all. And no ongoing or hidden fees in there. So just a single simple fee for when you get funding. It's automated online approval and funding process. So very quick and easy to get approved and then get ongoing funding. And it's private, so there's no changing to your existing invoicing systems. Your client will pay directly to your bank account itself. Also allows an obligation-free pre-approval, so you can set up a facility in the background to have when required. If you never use it, there's no charges, but obviously provides a bit of risk minimisation and security in the background there should you need it. Some of the issues with on-demand finance can be a high cost if used every month. So it's not a product for longer-term business capitalisation or to be bringing forward your finance all the time. If that's the case, there's possibly cheaper longer-term solutions such as term lending that might fit that gap. So again, on that, it's used to smooth cash flow dips as opposed to capitalising the business. We look at invoice financing. Some of the benefits include obviously bringing forward the payment of your invoices and getting that money in your bank account today. It's obviously only repaid once the debtor pays you, and it works really well for large and medium businesses. Some of the general solution issues, so it's not for small business. Obviously having those minimum caps of about $50,000 to $100,000 there means that a lot of the businesses around it's just not quite suitable for. There's a few changes that are required to get into it, and the relationship changes. So you do lose a bit of the control of relationship with your clients. So generally difficult to get into, relatively difficult to manage, and difficult to get out of. One of the major issues for a lot of small to medium businesses is the requirements to change the bank account that your client pays into. So the payments from your client will actually go directly to the invoice finance company, who will then refund the applicable amount back to you there as well. And designed to lock into ongoing use, so there's generally contracts for a certain period of time where they manage the debtor ledger there for you. Next up, overdraft and credit cards. Relatively simple products. You'll all have an understanding or experience with them. Overdraft obviously gives you a limit that you can spend up to beyond what's currently in your account. Generally for businesses, we're looking between $5,000 and $50,000. Property security is generally required in these cases, and the application process can vary. So if you have an existing term account with the provider, the application process is a lot quicker. But if you're going through a new process with a new provider, it can take up to 4 weeks to get an overdraft established. Quite often, they'll also require additional work, possibly from your accountant, like a cash flow forecast. They can add some additional time and cost constraints on this sort of product. Credit cards, borrow money as you purchase expenses using your credit card. Lending amounts generally anywhere between $100,000 and $20,000. No security. Some of the traditional providers, there is a more extensive application timeframe, but so a lot of the newer online providers can provide a really quick turnaround there for you. So again, a little bit more of a deep dive into overdrafts and credit cards. Benefits, it's standard for most small businesses. They know what it is, it's easy to use and to be understood for. Some of the possible issues with that, it's difficult to obtain larger amounts with no property security. So there is a limit on what an overdraft can provide if you don't have any property in the background. There's obviously quite high unarranged overdraft fees. So if you were to go beyond your set limits, it can be quite a costly process there as well. Credit cards, easy to get, easy to use, basically. We've all probably got some form of credit or debit card and would understand the process there really quickly. Possible issues is there is generally a limit on the amount a credit card can go up to. So again, for those larger costs or opportunities that do come up, a credit card may not be the most suitable solution. And again, depending on your habits and type of facility you have, can incur quite high costs on an ongoing basis. So next up, we'll run through the business capitalisation options that you have for your business. So these are the longer term options for expansion, major asset purchases, longer term cash flow availability for your business there. So look at secured and unsecured term loans to start with. So effectively, you're getting a lump sum in your bank account, and then you'll pay that back over the term of the loan with added interest on top. If you're looking at larger amounts, generally you're going to be needing a secured term loan. Amounts vary, but generally, obviously, for small to medium businesses, sit within the range of about $100,000 to $2 million. Property security is required in these cases, and because of they're offered by your traditional institutions, application generally anywhere between 2 to 6 weeks. Unsecured term loan, exactly the same as a secured term loan, obviously with no property secured in the background. The lending amounts do tend to be smaller than your secured term loans. Most of the players in the market are looking at around that $500,000 to $250,000 mark. With your traditional providers, can take up to 6 weeks to get that application organised. But again, there are a number of newer online providers that can provide a relatively quicker turnaround than the traditional banks. Look at the pros and cons of a secured term loan. Lowest cost of capital available. So the longer term capitalisation of your business, if you can get a secured property loan from an established provider, it will be the cheapest form of long-term funding you can get. And obviously lump sums can be used for major purchases or expansion opportunities. Some of the possible issues with that, obviously, as mentioned before, can be quite an extensive application process. And as per the overdrafts, there might be, it's likely there are some additional time and costs requirements, whether that's updated cash flow forecasts, possibly extended profit and loss and balance sheet statements, or which should most likely have to be provided by your accountant. And depending on the solution that you were originally looking, or the problem you were originally looking to fix, term loans obviously provide a lump sum payment for you, but have ongoing cash repayments, generally on a fortnight basis. So if you're filling a short-term gap in cash flow with it, the ongoing payments can create ongoing cash flow issues with those payments going out over a significant period of time. Unsecured term loans, again, similar benefits that a lump sum can be used. Obviously, the major ones with this is no property security is required, and the newer lenders do have a quicker application process than your traditional providers. Some of the issues with this is, while it's got some of the same benefits of a term loan secured, without the property security, a lender will actually require a greater return for their funds there for you. So generally quite significantly higher fees than secured lending. And again, regular repayments, if you're looking for it to solve a short to medium term issue, the longer term repayments can create ongoing cash flow problems there for you. Equipment finance. So what this is it's funding specifically to invest in or upgrade your equipment and assets. Lending amounts depend on the value of the equipment you're looking to finance, generally between about 30 to 100% of the equipment value, depending on the estimated resale value of the asset itself. The security is against the asset, and application time, while not very quick, can go through in a matter of weeks there. So if we look deeper into equipment finance, you've obviously got built-in security with the assets that you're purchasing. Generally is cheaper than unsecured lending if that's the purpose you're looking at using it for, and obviously helps you to purchase equipment to help with growth or operation that you may not have been able to afford otherwise at that time. Some of the possible issues is depreciation. So obviously you're purchasing an asset that is reducing in value over time whilst you're still making those repayments. It's a relatively narrow scope of what you can use asset finance for, and generally only available for equipment or assets that provide some value to your business. And generally the percentages obviously change as well. So the higher depreciation rate an asset has, the less amount that a lender is likely to be able to provide for that asset finance. So far we've run through on-demand finance, invoice finance, overdraft and credit cards. So all proven ways to help with your day-to-day business cash flow. We've also gone through secured and unsecured term loans and equipment finance. So all ways to capitalise your business in the longer term. As we mentioned before, most businesses have funding facilities in place. However, on an ongoing basis, encounter ongoing cash flow issues. So we'll talk a little bit around that and around the possible solution moving forward. So as you can see, most businesses have their bank facilities in place, but due to ebbs and flows of cash flow, timing issues, whatever it is, sometimes those facilities aren't quite enough. What we're finding with a number of the major banks there at the moment as well is that you almost have to prove you don't need the funding before they'll fund it to you. So it creates a bit of a chicken or egg scenario, that their risk profiles are getting less, and it's getting harder for small and medium businesses to get the financing or funding that they need. So FundTap, what we like to say is we're invoice finance, but easy. So businesses in a general sense will have to arrange and pay for finance at the safety level there to cover all different scenarios in their business. Where we fit in is we can work in with your main forms of funding to help support those cash flow dips, so possibly reducing your overall lending requirements. So as it's on demand, obviously you can there for as and when required. So FundTap was a traditional invoice finance company for about 7 or 8 years. We've reinvented from the ground up to remove a lot of the fish hooks that were involved and built a system that was tailor-made for small to medium business to help them get going and build their business as quickly as possible. So a system allows you to get started in minutes, approved in a day, funded in hours. It's obviously on demand. So it's only when you need it and not when you don't. There's obviously no establishment or ongoing fees there. One of the big things obviously been as well as the privacy part. So clients, as far as they're aware, there's no changes at all, and they just pay directly back into your bank account as per normal. So if we look at FundTap, why use us, who it's suitable for, and actually how much it costs. With regards to benefits, we'll provide up to 90% of the invoice value. So that's getting cash into your bank account sooner rather than later. It's an easy process. So the setup, the funding, and ongoing management is a very simple process. We're online and automated. So we automatically sync with the 4 main accounting programs, being Xero, MyOp, QuickBook, and Reckon, to allow a very simple funding process, which I'll take you through the demo there shortly. And there's obviously no minimum invoice value. So what that means, as an example, if you had a cost for $800 coming up in 3 days' time that you knew you just weren't going to have the cash for because your client wasn't paying you until next week. So we could effectively fund any amount, the way our system's set up, to take care of those little troubles there for you. Who's it for? So the businesses that we look to work with, turning over at least $5,000 per month. They've been trading for at least 2 to 3 months. And what's important for us in that aspect is that we can see some form of history of invoices going out and being repaid. And we can provide up to a $100,000 credit line. So what that means is we can fund up to $100,000 of future invoices into your bank account within hours. As far as how much it costs, so we've got a single transparent fee, typically of about 4 to 6% of the invoice value, depending on how long the invoice is outstanding for. We've got a simple to use pricing calculator on our site that will give you the exact amount, and that amount will be, given to you for approval before you submit any invoices. As mentioned before, no establishment, admin, hidden or other fees, and no lock-in contracts at all. So it's purely on demand, a single fee when you need us, and no charges when you don't. So what I'll do quickly now is I will run through a demo of our system, just so you can see how easy it is. So if we look here, if we connected our Xero account, what the system will do is once you're set up and looking for funding, when you sign in, it will show all of your outstanding invoices. So from there, as an example, if I was looking for funding for $10,000, I'll be able to go through and pick and choose the invoices that I wanted to fund to get to my $10,000 level just up here. Submit the invoices, and that's it. So from there, that will come through to our team who will approve payment and have payment through to your bank account within hours. Once you are actually funded the amounts, that will come through on the next screen here. So what this allows you to do is a couple of cool features, because we understand that business is unpredictable. Clients pay early, clients pay late, you come into cash you're not expecting. So there is some flexibility in the system for repayment. So when we make our funding amount, we will automatically set up a direct debit from your bank account on the date the invoice is due. So you'll see here, Bob the Builder, due date on 8th of April. What we know is that Bob the Builder called and actually said, hey, I'm coming into some cash and I'm actually going to pay you on the 4th. So you have the flexibility to bring forward the direct debit date. Simple as that. What that will actually do is recalculate our fees to recognise the shorter repayment date. On the other hand, we've got home services here. They've called to say that, really sorry, we're going to be 4 days late in making payment through to you guys. So you also have the flexibility to move back your payment date up to 5 days. Simple as that. If for any reason your payment is expected later than 5 days, just feel free to get in touch with us, and we're more than happy to work with you around a plan for that and push back payment dates where required. So what I'd like to talk through now a little bit is this will, a recording of this webinar, and will come out via email from Tradie Wives over the next couple of weeks. We've also just completed, I guess, the information we've gone through in much more detail, a handy guide for small business outlining all of the options and differences for funding your small business and the pros and cons of each. So there will be a link in the email that comes out. I'd recommend you can go to our website, download that for free, and have that handy for moving forward. A little disclaimer, we have made it as non-salesy as possible. Obviously, what we're looking to do is provide an informative guide for small business to help them with their options moving forward. So you'll see it's got a relatively comprehensive breakdown of what it is, costs, the benefits, etc. And that runs through the 7 main forms of financing that we've gone through today. With regards to who we are and how we operate, at the moment we've got 100% 5-star ratings on both the Xero Marketplace and Google reviews. We are very proud of the finance product that we offer that's been built specifically for small business. So we've got removed a lot of the fish hooks that are currently involved with it. Backed onto that, we're very passionate around what we do and our clients, and so we make sure our focus is on providing a seamless service throughout. So while we provide a service that can serve a purpose for you, we'd also like to think that it's an easy and simple and friendly process that you're going through there as well. So obviously, as part of our relationship with Tradie Wives, there are some benefits that come through with that as well. So you'll see we've got a specific portal that you can sign up through Tradie Wives to receive a discount, or you can use the promo code Tradie Wives when signing up to receive a discount as well. So anyone that comes through from Tradie Wives receives an automatic $100 discount on their first round of funding. As mentioned briefly before, we've also got an obligation-free pre-approval process. So what that means is you might be in a comfortable situation right now, but you know that your business does experience ebbs and flows or seasonal variations in your cash flow. It might be that you have another project coming up in a couple of months. So we're very happy to go through the process and set up a facility for you just in case it's needed. If you never use us, there's never any charge. The only charge is when you look to get funding through from us. So in that, we're willing to sit in your back pocket, to help you guys sleep better at night, knowing that you've got your cash flow sorted. So from here, I'd just like to thank you all again for tuning in. My name's Laurence, Head of Business Growth. We're FundTap, FundTap.co, and you're more than welcome to get in contact with any questions at all. Best of luck for what is obviously some challenging times ahead, but in challenging times there always is opportunity for good operators. Thanks again for Maddie and the Tradie Wives team for having us along, and look forward to hopefully talking with some of you again soon. Any questions, feel free to reach out. Otherwise, enjoy the rest of your day. Thank you.